evening, everyone, and welcome to Startup Central. This is the first and only daily show in India dedicated to startups and entrepreneurship. I'm Avan Dabash. Let's take it straight to the big story and the big headline that shook the startup world. The Ministry of Corporate Affairs has become the latest government department after the Income Tax Department to question the premium paid by investors in startups after issuing notices to more than 2,000 startups that have raised money since 2013. Now, these notices have been issued over the last 45 days, with the ministry asking whether these startups have sought exemptions under any government scheme. Is the tax terror back for the India ecosystem? We have guests on the show to find out just that. That's the burning question. Joining in, we have K. Ganesh of Growth Story for an investor view on the entire issue, as well as Prateek Saraugi, an entrepreneur who received another notice from the IT department as well. Great to have you both on board. Thanks much for joining in. Prateek, I'm going to come to you first. We're discussing these MCA notices at this stage. You've received a notice as well from the IT department for a share premium. I'm told it's the first notice that you've received. Can you just tell us a little bit more about the previous notice in terms of what the experience was dealing with the IT department in explaining the nature of the business and the valuations?
Sure. So the IT department tries to value companies in terms of assets that they hold or cash flows that they've generated, and it sometimes gets really difficult to value startups with intangible assets and how they're going to project in the near future. So with that, when investors invest in startups at a heavy premium, that sort of becomes something that the IT department hasn't really seen too much of, and that becomes a burning question or a scenario that they are not able to justify, thereby coming to a conclusion that if we are not able to justify this, should this be taxed as an income to that startup?
Okay, so let's also bring on board then our next guest. Srijit as well is now joining in on the show, founder of True Elements. Great to have you on board, but I'm going to take the question first to Ganesh. And Mr. Ganesh, as an investor, I just want to understand how you're looking at these developments now coming on board.
No, so see, this whole thing started back when Pranab Mukherjee was finance minister, when he started the concept, what is now infamously known as angel tax, because when angels put money at a premium, it is seen as income from other sources, and there also there were talks of being applied retrospectively and all of that stuff. So this was the thing that was started then at that time, and we have been suffering from shades of it since then. It's a retrograde step and bizarre. Fortunately, over the last few years that we have seen, most of the actions, almost all the actions from the government and the ministries and powers that has been on the positive side to encourage the startup ecosystem. So therefore, I'm surprised by sudden notices from MCA. I have not seen the notice per se to be able to comment on the detail, but it clearly does not help. Now, to be fair to MCA and income tax, the entire concept of share premium and valuation of early stage startup is very difficult to understand. Even for us investors, especially in early stage startup, we get it hardly right 1 or 2 out of 10 times. So our hit rate is like 10% or 20% for getting it right. So balance 80% of the time, we put hard-earned tax-paid money into startups and lose the money. We do that. Why do we lose it? Because we don't understand it. So is the share premium right? Is the valuation right? Obviously, 8 out of the 10 times it is wrong. But that doesn't mean somebody is gaming the system or somebody is taking undue advantage or is going around the system to avoid the tax. So at a very basic thing, MCA people, income tax people are very need to understand how the valuation is determined, which is very difficult to explain even to experienced investors because they get it wrong 8 out of 10 times. So I'm not surprised at the question, but it has never happened in any country that you will be able to clearly explain. Otherwise, why would companies be valued at 6 billion, then go down to 1 billion in a matter of 1 year? We have seen companies like Swiggy, for example, companies like Udaan, for example, in a matter of 2 years, go from 100 million valuation to $1 billion valuation. Now, if you go back and in hindsight, find out, can somebody explain why the valuation was 100 million, then 1 billion now? Nobody can. If I had had an inkling about Swiggy valuation or Udaan valuation, I would have put all my money 1 year back in them. But I didn't know. But similarly, you have other cases where companies valued at $1 billion have gone down. Okay, right. So I think it is a tough question. MCA and income tax should appreciate the fact that this is not
I
something
completely
that can
get what you're
easily be done.
saying in terms of how you're reading into this as a fairly backward step, if you will. Srijit, why don't you come in here? You've been very vocal when it comes to angel tax issues. Now the MCA is broadcasting it to all VC and PE investments. Do you share the same sentiments as Mr. Ganesh?
I completely agree and share the same sentiment as Mr. Ganesh. I mean, me being one part of 50 founders who have been fighting against angel tax since last 1 year, there has been, as Ganesh sir has told, there has been a clear-cut document ready as to who can get an exemption, who cannot. At least that is there since April 2018. It wasn't there earlier. Okay, but that said that, still what it says is that any company whose post-money valuation is beyond 10 crore cannot raise an on a premium valuation from individual investors. Is not right step in an ecosystem like India, where every company whose valuation about 10 cannot get a VC funding. As Ganesh can corroborate, I mean, 10 to 30 is the valuation where people struggle, and we need individual investors. That's where the struggle comes in. But as we have been telling since beginning, what an MCA, what an income tax authority should be bothered about should be only two. One, whether the money which has been coming is a clean money. You ask, dig, deep dive, we will give all the data as a startup. We are responsible companies who want to become big in future. We will give you on source of fund. Investors will give you on source of fund. Second, on valuation, if as Ganesh has told you, the valuation from 1 billion goes down to 100, go and understand the logic just to validate if there is a hunky-dory. In 99% cases, it may not be the case, but if you want to go and see whether the company is a genuine company and genuinely the valuation has gone down, go and investigate. Leaving all that, you running behind 100,000 startups and giving in notices, I mean, it's a waste of time of you as an authority as well as the startups. But we agree that it has completely improved since last 2-3 years. There is a clarity. But again, going behind startups who have raised 1 crore and asking for documentation of last 3 years ITR of angel investors, it's a waste of money and time of everyone in the system, right? Just go behind these two is what I will tell. Blindly sending 2,000 notices over a couple of days, it's waste of resources.
Okay, waste of resources, waste of time. Prateek, I'm sure you're sharing the same sentiments, but the DIPP issued this notification in May this year on exemptions to angel tax, saying that it would be exempt pertaining to certain conditions. Did you try taking that route?
So we have just tried explaining the source of funds, the nature of our business, the research and patents that we hold, and how we derive to a certain valuation, sharing CA approved valuation reports. Most of the IT department officers would not really be aware of about what is really happening right now in terms of new initiatives that are brought in terms of case laws for the startups. So we've just gone ahead and done things as we are needed by the book or by the notices or the letters that startups have been receiving.
Okay. Mr. Ganesh, as an investor, what kind of regulatory clarity are you looking for? Is there some sort of a middle ground with maybe different departments stepping in, in order not to complicate the issue further? So what is it that you would like to see as an investor when it comes to the overall regulatory hurdles?
See, I think firstly, startup is an extremely tough and a low probability success game. The entrepreneur is creating jobs. The entrepreneur is struggling against all odds to give birth to a baby and make it stand. My first regulation is, for the first couple of years at least, just don't issue any notices, leave them alone. Because the chances 9 out of 10 will anyway shut down. Then there is nothing, nobody has gained any money. So point number one, apply a selective principle. Have a certain de minimis, saying that companies which are of small scale or less than 2 years, we are not going to bother till the time they start figuring out what they are going to do. Because even from the point of view of ministry or income tax department, it doesn't make sense going after 2,000 startups. Focus on real large ones when they have become certain scale. I think that is something which is one. Two, this sudden notices, sudden things, when all of it creates unnecessary work for the entrepreneur whose job is to create jobs. We need startup to create jobs. If you take regulatory, use Israel, Singapore, and other countries' regulatory framework for startups as an example. They encourage startup. They allow you to write off the investment when it goes bad. It's bizarre to have an angel tax when you know that 90% of the time the angel is going to lose the money. Third, when an exit happens, like the Flipkart exit happens, income tax collected a lot of money. When the exit happens, please collect the tax. If nobody minds paying tax when people make money and an exit. Angel investment or PE investment is not an exit. It's money coming into the company. I've never heard of a situation where income tax is levied on some investment rather than on exit. Nobody has made money. The poor entrepreneurs managed to convince some angel to put money. He has to go and figure out the business model, product market fit, and over that he has to answer questions on angel tax. I mean, that's just not fair. And it makes it look like will the entrepreneur do the business or will handle all these questions. I think a really
absolutely right, because this
has to come from.
Right. Your point is definitely taken in terms of what exactly this does in order to look after this sort of a legal and the tax tangle, if you will. Srijit, what's the way forward from here? Are you hopeful of things improving?
It has been improving. I think there is this disconnect between what in the startup world stuff is happening and what bureaucracy understands the way it happens. Bureaucracy understands that every place where there is money and exchanged or generated is a potential source of income or something which is illegal happening, which is not the case. Which probably, there's an understandable gap of bureaucracy of what should be done is what I would put it. It has improved a lot. There has been clarity on, as Pratik has rightly told, there's a clarity on which startup can raise fund. But again, that's a very lengthy process, because the current process of raising an angel tax and getting an exemption is 6-month old. That means you need to apply before you raise the money to the interministerial board with the documents of investors of last 3 years ITR, evaluation report from a mercantile banker and companies, all documents, and give it to the interministerial board, who sits on those papers once a month and wait for them to approve. If they approve, you get the angel money. That is not how startups get built. In 6 months, as Ganesh has told, startup may not exist. At an angel level, every day is crucial when you have a process which is required to be followed to raise an angel money. Of 6 months, it is an alarming situation for startups to flourish in India. So yeah, there is an understanding gap. I would not blatantly tell that nothing is happening. Things have moved in last 18 months. At least we have seen, because first time we raised this issue is last year, December. We saw at least 6 notifications which went on coming. And final one, as you rightly put, sometime in April end. Nothing has happened after that. In my case, I have applied through IMB for an exemption. I'm waiting for a good news, because my ITRs are clean. I have spent it rightly. My valuation has not dipped. So there is nothing which has gone wrong. So we believe the system. Yeah, but probably bureaucrats need to understand, and startup need to wait for 6 months to get an approval to raise an angel investment is bizarre. But we are still hopeful.
Fingers crossed, I'd say. Thanks very much then, gentlemen, for, airing out your grievances of what you've made of this as well as the way forward. It's been a pleasure having you all with us on this forum, talking about this main topic with respect to the tax concerns for startups. On that note, tell you what, let's take a quick break, come right back. We have lots more lined up on the other side with the controversy surrounding Twitter CEO Jack Dorsey's faux pas. Get you more on that when we return. Welcome back. This is Startup Central. Let's focus in on the faux pas by Twitter CEO Jack Dorsey, and he's on the receiving end of a Twitter storm. He's been photographed holding the placard that said, "Smash Brahmanical Patriarchy." The image has now gone viral and it's sparking a big caste war online. Let's get in Rahul Dayama, who joins in with more details. Rahul, Twitter must be going nuts about this completely avoidable incident. What is everyone saying?
you know, it really started off as a simple picture that a women journalist uploaded on the platform. You know, he had met a few women journalists, change makers, and a Dalit activist, Twitter says, happened to gift him this placard, which by the face of it seems like the Twitter CEO did not sort of comprehend what this means. He just happened to pose a picture, but it definitely has triggered a big virtual caste war, so to say, because both fractions have come out. In fact, you know, former Infosys board member Mohandas Pai was one of the first Twitterati to call out the social media platform, telling them what is that is really happening. Later on, we have seen Twitter really issue an apology, with the legal head Vijaya Gadde sort of saying that we're very sorry, it's not reflective of our views. The official statement of Twitter indicates that the image, the placard does not really stand as a statement to what Twitter or the CEO believes, but you know, it's their efforts to sort of see, hear all views that you know, comes by on the platform. Interestingly, the Twitter CEO has had quite an eventful trip in India. I remember he met with Indian Prime Minister Narendra Modi. He met Bollywood celebrities in Mumbai, journalists across the board, but this controversy was clearly avoidable, but it seemed to have gone out of hands for Twitter also to handle, because the response also came in a tad too late, with everyone sort of taking a stand on the issue.
Oh yes, everyone taking a stand on that issue. Twitterati going abuzz with that picture. Thanks very much, Rahul, for putting that into perspective. But let's move right on then to the weekly funding meter and get you a sense as to where we've seen money pour in the startup world. Well, for the week ended November 12th, you have VC investments, close to 8 deals that have taken place worth $23 million. So that amounts to a little bit less than what we saw in the previous week, where there were about $53 million in just 4 deals. Well, Unichem has raised close to $10 million. That's the first company. You have a sum of close to $5 million being raised by Mobile Premier League. Perpule has raised something like $4.7 million. So this is from a Prime VP, and Kalari as well as others. Mobile Premier has raised those $5 million, and that's been led by lead company Sequoia. And Unichem has raised close to $10 million from US-based family office. There's also Milk Basket, $1.4 million is what they've raised from Mayfield. I bet everyone's logged on to DriveView. That app has managed to raise close to $1 million from Stevenson Creek Ventures. Square Off has attracted funding from K-Start, and Easy Ecom has raised a sum of 50 lakh rupees from Amistad Ventures. And as we wrap it up on this leg of the show, Mumbai-based Credit Vidya fintech startup uses alternative data sources to assess fraud and risk after raising $5 million from Matrix Partners and $2 million from Kalari Capital. I chatted with Abhishek Agarwal, the co-founder of Credit Vidya, about the road ahead. Listen in.
There are roughly around 500 million individuals in India who lack credit history, and because of this lack of credit history, they don't have access to credit, and hence that's where the idea of Credit Vidya came to my mind.
So we hear a lot about these fintech startups. How is Credit Vidya different, and can you tell us a little bit more about the mission of the company?
The complex social problem we're trying to solve is access to affordable credit to underserved. We have already profiled over 12 million customers. The customers that we kind of serve are the customers who earn anywhere between 10,000 and 30,000 rupees as their monthly income. These guys are both salaried or self-employed, living in tier 1, 2 and 3 cities.
So congratulations, because you guys became cash flow positive in your second year itself. Can you tell us a little bit more? What are the targets? What are your financials?
So a lot of our investments has gone into R&D. As far as revenue numbers are concerned, we are doing 2x compared to what we have done last year. And the number of customers we have profiled has grown up by maybe over 5x.
There's been quite a bit of fundraising. I understand a total of about $7 million. Can you just tell us what exactly you've raised and what's in the pipeline?
We've been fortunate. We've had partners, or amazing partners. Both Kalari and Matrix have invested in Credit Vidya. We have raised so far $7 million. We've just closed one more round. I don't think I can reveal too much right now, but this is the fund that only invests in deep tech companies, and they've kind of closed a round right now.
Finally, you're pioneering one of the most successful B2B fintech companies. So in light of this, what's your advice for young entrepreneurs?
So I think if I were to say one advice, that would be to never give up. In my last 3 years of running Kharidia, what I've realized is there's going to be many challenges that's going to be thrown out at you, but the key to all this is, right, to always focus on your goal and to never give up.